What's up, family? We're on the interwebs. We're live. It's Friday. Are you having a good day? Hope you're having a great week. Should be. This isn't the ideal mortgage rate chart for us, that's for sure. I'm a mess right now. Let's wind that down a little bit there. Wind it down a bit. Close that out. All right. This is my last video that I'll be making in these janky conditions. So I'm a little bit happy. It's also a Friday. Got to travel all day tomorrow. It's going to be fun. Not really. But there are some things that are looking pretty darn good right here. If we can get past the speech the president made last night, which is one of the scariest things I've ever seen, like a villain in a horror film. If you get past that craziness and what that looked like, then you can look at things that don't look as bad as a lot of people think. We're going to be real truthful here with ourselves. We're not going to paint anything with sugar coating. We're not going to over glorify or over negatize anything as well. We're just going to look at this for what it is. What's going on right now? I can tell you right now, what's very interesting about this market, and I'm going to show you this interest rate chart. It looks like, hey, listen, you're telling me things are good, but look at this descending channel that we have here in mortgage bonds, and that's not good, right? When bonds go down like this, get my market out. When bonds go down in price, that means rates go up, and it's true. And we've lost a lot of ground. You know, we were at one point here at 102, and now we're down at 99. That's 300 basis points. But we had a nice bounce here, and this is really, really good for a lot of reasons. Doesn't mean that it's amazing from here on out, but a 41 basis point bump today going into the long weekend shows us that there are buyers at these levels who are willing to take risk over the weekend. That is a really, really good sign. Now, the stock market showed some weakness today. I'm going to show you that as well. What I'm seeing is a market where anyone can win. It's now back to hustle. It's back to hustle. A seller can get multiple offers, get top dollar for their home in this market. A buyer can also get closing costs and all sorts of things. What's the difference? How is that possible? Okay, it's a balanced market. That's what we've got. So that means that if you're a seller, if you present your home properly, you photograph it properly, you stage it properly, you present it well, price it well, you're for sure getting multiple offers. I have 2 offers out right now. Both of those homes already have offers on them, multiple other offers on them. Okay. So it's possible right now for you to be a seller and to create a seller's market for your property with the right realtor, of course. By the way, if you need a realtor suggestion, let me know. I know some great realtors, and I can connect you with somebody or give you multiple names, whatever, if you need help finding a great agent. So you can, if you present your property accordingly, you can have a seller market for your property. If you're a buyer, what you want to do is look for the properties that are not doing that. Okay. Look for the properties that are not presenting well. Here's a great thing. All right. So like, don't pass up the homes that have shitty pictures. Okay. If a home is like photographed terribly, go see that home. Because the best thing that can happen to you when you're looking at homes is you get to the house and you go, man, they need better pictures. This place isn't that bad. And by the pictures, we thought it looked terrible. They're dark, or they're not framed well, or it looks small. Go look at it. Especially if it's on the way or you're looking at other homes in the area, look at that one too, for sure, because you know nobody else is. And if you go there and you're like, wow, they just need better pictures, the place is great. It happened to me multiple times in my life, my real estate life, multiple times. And those are always the best deals. So if you see one that's got shitty pictures, I don't know what else to say, and you see one that maybe doesn't look that good online, but it meets your criteria, right? Bedrooms, right? Bathrooms, right? Location, right? Size, maybe has a nice yard, but you look at it and you're like, no. Because I do the same thing. Most of the time I do. Looking at homes online, it's like, not even close. Can't even fathom that one. Wait a minute. Now I've learned. So I go back and I'm like, wait. Let's look at this again. Let's look at this one again. So that's something that buyers could do. Find a home that isn't properly presented and marketed and priced. And that's where you can come in below list, get closing costs, get all your requests for repairs, get everything. It's great. So a market where both sides can win if you hustle right. You got to love it. You have to love that. All right, now let's get to mortgage rates. Yes, we're in a descending channel. It's true. Why am I excited about it? Well, I drew the lines ahead of time today so I could get them right for this descending channel. I want to show you why it's good. And it doesn't mean that it's necessarily a great thing, but the activity that we're seeing right now, particularly the last couple of days, is in fact good. Right here, these last two candles, these are daily candles. Okay, so yesterday we had one. I was going to make a video yesterday, just couldn't get to it. We have a nice lower wick here, right? That's what we want to see. Usually we get these wicks down the bottom. That means prices are going up, right? These wicks over here at this bottom, wicks over here at this little swing bottom. That's what we want to see. That's ideal, right? So we get a little nice wicky wick right here, and that's right at support, and it's also right at the lower end of the downward channel. So you had 2 points of confluence there. Perfect place to long this thing if you're trading it. And then we get today, we come down and touch the support again. Do not come anywhere near the channel. So yesterday, we needed both to get us back up above, close in a good position. Today, bouncing right off the channel. And nice and high. I think we got 41 basis points today. 41. That's nice. That's a chunk. That's good. That puts us in a position where we're now closed higher than yesterday and the day before. Not the day before that. So we closed better today than we did Thursday or Wednesday, but not Tuesday. Tuesday, we were still quite a few, 20-some basis points higher than this. So if you lock Monday or Tuesday, you're still probably better off than rates are today. But this is nice. I expect us to swiftly, Tuesday or Wednesday, to test the upper end of this channel. That's where we're going to find out if we can break out of this thing. If we can get above that, if we can close above that channel, that would be huge. We could be setting a new trend. It's also possible that we could, kind of go up here and ping off of this thing and then come right back down and test this support over here. And this is this is the Alamo right here. So we don't want to test that. It'd be much better if we just create this higher low and move higher, because higher bond prices would be lower rates. Fannie Mae's forecasting this. I'm expecting this. It would make sense for rates to go down. We just haven't seen a lot of bond demand. And I think a lot of that has to do with what's going on in the stock market, which we'll discuss momentarily. We are live on Facebook, LinkedIn, YouTube, Twitter. Drop a comment. Say what's up. Happy Friday to you. And let's keep this show on the road. All right. So quick couple of things here. So mortgage rates, balanced market. Mortgage rates have gone up recently, but looking better here in the last couple of days, potentially for that bounce. I've been telling you, I'm expecting a bounce. It looks like there's a lot of shakeout going on here, a lot of gaps in these days and stuff, just kind of funky stuff you don't normally see in the bond market. Clearly some weirdness going on. This could just be a shakeout. Weak hands getting shook out before the big March higher. I think that's totally possible. Could be wrong, but I think that's totally possible. Also got jobs number today. Rising unemployment rate was the best news in the August jobs report. How could that be? This is actually pretty interesting. The increase is largely attributable to the labor force growing. So the labor force is growing, which is encouraging trend. And it is, the labor force growing is not a bad thing. We know there's a lot of people still hiring out there. The economy seems to be chugging along, even with inflation headwinds, even with lots of uncertainty, even with being in a recession. It doesn't feel like we're going to have a big negative number for this next quarter GDP. Maybe really close to a zero, maybe a tiny positive number, even possible. Okay, taking us out of the recession, that's possible. Maybe not, but it could. I mean, we don't know, but it's not going to be a big number either way. We're not going to have a huge GDP this quarter. We're not going to have a terrible GDP this quarter. It's going to be somewhere in that close to zero range. So even though we've had negative consecutive quarters GDP, it's been very slightly negative, not that negative. So it's one of those, like I was saying, it's one of those shorter recessions, probably 6 to 8 months. That's going to encompass 2, maybe 3 quarters. I do believe that it's very likely we are the buyer's advantage on some of these homes could be going away. I truly believe that is quite likely. And if rates do drop 1% by next year, as predicted by Fannie Mae, and I think that's pretty reasonable. That's not a huge move, pretty reasonable. But if we're heading in that direction, that way, nice and steadily, that'd be perfect. And it would really, really help the real estate market move higher. Now, a lot of people don't want the real estate market to move higher, either because they've predicted a crash and they're hanging on to that. They're not looking at the reality of what's going on, or because they're an investor and they want to see lower prices. They want to purchase. I understand both. I do. But we got to look at the reality here. Here's an interesting one from the real estate side. 1 in 5 home sellers are now dropping their asking prices. The housing market cools. Notice that they've said this multiple times on this site, okay? as the housing market cools. That is something that they have said. Now, the housing market has cooled for sure, but I'm seeing on my level, as a lone guy, I help people buy homes. I help people refinance homes. That's what I do for a living. That's why there's no ads on these YouTube videos. I'm seeing people come out of the woodworks to get pre-approved. Now, pre-approvals don't mean offers, though. So I'm not getting too excited, and I'm not talking about it a whole lot. But we did a lot of pre-approvals this week. Did a lot. And it's only Friday. We've got a 3-day weekend. We got a 3-day weekend this weekend, which I think is a sweet spot weekend for buyers. This weekend might be the weekend for buyers, because you have a lot of buyers not participating this weekend, vacation, whatever, taking a trip, taking a week off, the weekend off, taking an easy 3-day weekend, short vacations or whatever. Last one, right before school really hits its stride across the country, particularly in San Diego. Most schools have already started, but a lot of schools, obviously all schools, are taking off Monday, and some of them are even taking off today, which is bizarre. So I think this weekend you won't see as much buyer participation, potentially because of that. And the buyers who are out there can really rule the roost. You got 3 full days to make it happen. Already 2 offers out today, and it's only Friday. I'm expecting to see a lot of my pre-approvals go out and fire away at this market. I totally am expecting. I'm so slow with this setup, guys. I'm sorry. I am totally expecting trigger pulling this weekend for offers, and I'm expecting to get some acceptances as well as a result. So I'm going to be prepared. I'm going to be ready to run numbers, calculate payments, talk to listing agents. I'm going to be ready to nail it for my team, my people, and take advantage of this, because I honestly don't know how much longer the buyer opportunity here can last. And while everyone's talking about, oh, sit back and wait for the crash, I've said this from the very beginning, but what if you're wrong? People giving out that advice. People out there telling folks who want to buy houses, no, don't do it. Don't do it. Wait. That's a dangerous piece of advice. What if you told him to wait out the one opportunity we've seen in the last decade for buyers to actually come in and do something and negotiate? What if you gave someone the advice to wait that out? Because what if the market starts moving higher again? Then the people who waited will really wait. They'll be like, oh, no, it's just heating up a little bit. Now I can't. No, it'll come back. And then another year goes by, and another year goes by. That's the hard part about trying to guess the top of the market. You also have to get the entry. And so it's tough. It's tough to do that. It goes up and to the right. That's what the charts look like. So whenever you see opportunity, whenever you see a pullback, you buy it. Very similar to, not financial advice, Tesla stock. Tesla, what they're doing with Tesla, and I wish I could buy stock in SpaceX. These companies will be worth, as long as Elon Musk lives, these companies will be worth unbelievable, untold amounts of money in the future. Untold. So when you see pullbacks, you should buy a little bit more. I think Facebook is another one, Meta, and I think the metaverse is going to be insane. And I'm investing in that, buying in that every week, just like 5 to 10 shares a week. And set aside a certain amount of money for it, and just doing 5 to 10 shares a week. If it's really down, I put 10. If it's not really down, I put 5. So easy. Free trades on every site these days. It's crazy. You have no commissions on these trades. You can buy a few shares. You don't have to justify it by buying a whole bunch. But the same situation. When you see pullbacks in real estate, when you see opportunity, you go ahead and you pull the trigger. You don't have to get it exactly right. You don't have to get the perfect bottom, absolute best entry. All you need to know is that you got in at a discount to the people who have gotten in the last few months or last 6 months or whatever. You're getting in better than they are. And think about that. You 100% are. Not just in price, but in opportunity. Because if somebody bought a home 6 months ago, 9 months ago, if you go back far enough, they're up, right? But if you don't go back that far, you kind of send that rest of people, okay, maybe those people, they bought it at this and it's not worth that anymore. But they got a really good interest rate. They did. They got a really good interest rate. But that also means there's no room for improvement for them. So whatever they got, when they got that 3% conventional mortgage or that 2.25 VA loan, they paid over asking price and paid an appraisal gap and did all that stuff. What they've got, it is what it is. Now, if they try to refinance out of that VA loan to a conventional or something like that, they're going to take a much higher payment, much higher rate. If you're getting in today, I can almost guarantee you that in the next year or two, you'll be able to refinance for a much lower rate. So you have upside. So not only in this market are you able to negotiate, get closing costs right below list, get a counter no matter what, pretty much, as long as you're not being silly. And also, not only that, once you get into the home, secure your loan, there's a really good chance in the next year or two, you'll be able to lower your payment with a refi. You have upside. I mean, crazy, right? Homes are easily appraising at this point. Easily. Everything's coming in higher, which is what happens when prices go down. Okay. So it is not surprising at all that 1 in 5 home sellers are dropping their asking price. Not at all. This is how I would totally expect it to be more like 2 out of 5. And I believe it probably was in the very beginning, because remember, when it gets so exacerbated, when we get to a certain point in the market where sellers are actually pricing for what the home should be worth in a month or two, and hoping someone will pay that price now out of FOMO. And so you got to shake that out. That's silly, but that's how they'll want to do it. Oh, the last one sold for 900, list ours for 925. That's how they want to do it, because they don't know any better. And so you got to get past those people. You got to shake those people out. A lot of those guys are off the market now. Then you have to get to a point where you go, okay, well, the last one sold for 900. Let's list ours for 899. And then you don't get any offers. And you realize, okay, we got to list it for 849. Okay, now we found a buyer, blah, 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 or whatever. But just for illustration purposes. Then sellers start to realize, okay, we need to actually list it down here. And realtors start really pushing like, hey, don't list it there. You won't get any action. List it down here. And then let's negotiate with some people. Let's get multiple offers and let's get people going against one another. And that is working. So it takes a little bit of time for that to happen. That's all. Nothing crazy. Okay, let's take a look here. By the way, we are live. Give us a shout out. Shoot a comment. Say what's up. Happy Friday, family. Now, I've been tracking this. And the reason why I'm doing this, by the way, my bad. Let's see, that's the ticks. Is because the stock market is important to a lot of people, no question about it. It's also important to the bond market and interest rate and what interest rates are. But there's a lot of people who believe that there's this massive crash coming in stocks, and they automatically believe that is what's going to happen in real estate. I want to show you how these things are not necessarily related. They aren't. Now, if you have a system-wide recession, depression, like really big negative GDP, really bad job losses, companies going out of business, stuff like that, sure, you can have all those things happening at once, but it doesn't have to be that way. The stock market can collapse while the bond market thrives and while the real estate market thrives. And I do believe that's kind of what's setting up here. Okay, so let's take a look at this, because I've been chronicling this. This is the weekly on the Dow Jones. Okay, remember, we've been tracking this little area right here. I'm actually going to pull this out to the daily real quick. We're on the weekly here because we were talking about the middle finger candle that we got there and kind of what that meant for everything. I redrew this so you can see the bearish horn between those two lines there, two blue lines. Look at that. It's expanding and going down, and that's typically a sign of volatility to come. Now, this little area right here, this sweet spot, we call this the golden pocket. That's the 618 to the 65 Fibonacci. Yesterday, we came down into this. Let's get a little bit. We came down into this right here. We touched it, went through it actually, all the way down here, wicked down through it all, and then bounced back up. Got a nice candle there. Today was looking pretty good. Came back up to the 50 Fibonacci right there. And look at that rejection area. Boom. Sent us lower. And we actually ended up wicking further down than we did yesterday. But closed. Look where we closed. Inside the golden pocket. So not quite sure what this means, to be honest with you. But you can see there is support being established here. We have support being established right here. Oh, dang it. Bastard. Frustrating. I'm on such slow internet that is just mind-bogglingly frustrating. So now we have support right here. Okay? right at the golden pocket. A lot of people would look at that and go, you know what? I buy that. That's something you should buy, meaning that we think that this is going to go higher. Um, that's not necessarily the case, though. Anything could happen over a 3-day weekend. We do have rejection here at the 50, which we've talked about how that is typically a continuation area, which would take us lower. But it's a very critical support area right here. So what we see on Tuesday is going to be huge for whether or not we actually get continued support here or this support fails. And if it fails, bad news is we've got a ways to drop 500-600 points. We can lose pretty quick here in the Dow. So, but it could also be good. Now, we did see the bond market rally late in the day today. In fact, most of what we gained, as I recall, sorry, I'm so all over the place right now. Mess. What a mess you are. A lot of this we got towards the end of the day. The day just kind of started. We were positive a little bit in early going of the day, but really ran higher towards the end of the day. So if there is, and there was a lot of money exiting stocks at the end of the day, but this is good. This is good if the stock market's going to come in and we're starting to see the correlation again and money coming out of stocks and going into bonds. That would be really good for the bond market. So if that's really good for the bond market, that also means it's really good for interest rates to go lower, which is good for real estate. Do you see now how a stock market, not crash, but correction, stock market losing value, that can actually be really positive for real estate? Not only that, if someone has accrued money in stocks and they think they need to get out, where are they going to put their money? Well, they could put it in bonds. Again, good for real estate, good for rates. Or they could just buy real estate. And you're starting to see a lot of people do that right now. In fact, I've had multiple people in the last, let's say, 2 weeks that have or had significant stock portfolios that they have peeled off money, gone south, taken cash, whatever, however you want to say it, and we're planning to buy real estate. They're planning to buy real estate. So it's very possible that that kind of trend could be going on too. If the stock market really does get nailed, which is possible, you see it right there. I mean, it's critical support. It's 500 or 600 points if that breaks down pretty easily. It doesn't have to happen all in one day, but the next 500 or 600 beneath that is just, I mean, it's almost guaranteed. If that support doesn't hold, we're going to lose 500 or 600 points. So, and that again could be part of the catalyst. Remember, we've been waiting for a catalyst. We've been trying to figure out, what is it that could send bond prices way higher here? It could just be a really softening stock market. Now, typically the fourth quarter is really good for stocks, but most people are predicting September to be a terrible month. That's just what most people are expecting, September to be a terrible month. We won't get the Santa Claus rally until a little bit later. So we'll see if that has much of an effect on things. But right now, from where I can see, this is a market where you can win on either side if you play your cards right. So the key is to play your cards right. And if you're a buyer, that means, making sure that the way that you present yourself is strong, making sure that the offers that you're writing aren't silly, reasonable. They're reasonable, but you're looking for closing costs. You don't want to pay list, and you are putting contingencies in, and you're expecting that if the home doesn't appraise, which it will, I'll tell you right now, but you're expecting if it doesn't, that you'll renegotiate. Or if anything needs to be repaired from the inspection board, you're going to request that. And sellers are saying yes right now. So here's the thing. If you want to make sure that you're getting a good deal on your home loan, give me a shout. Call, text, email, whatever is easiest for you. Totally cool by me. That's my cell. It goes directly to me. I want to help you get a good deal. That's the main thing. No lender fees, wholesale interest rates. We have the hook up. So you don't have to go far and wide. You don't have to try to go to some online crapola. You know what? Here's what I'm going to do next week. I'm going to pull up. We're just going to Google best mortgage rates or something like that. We're going to pull up whatever comes up, and then we're going to pull up my rates. Let's do that. Let's do that on Tuesday. That'll be fun. Then we'll pull up my rates. I won't do it ahead of time. I won't do it. And we'll see what's what. How about that? Okay. And then someone's asking me about the S&P. We could do the S&P as well. I don't track the S&P. I've always tracked the Dow. Not that there's anything wrong with the S&P. A lot of people think the S&P is the market and that the Dow is just for old graybeards like me. You got the same bearish horn going on here with the S&P. I did draw that out previously, and it is still in fruition. And then if we fib this thing out, see, now this is actually interesting. So the S&P is holding at the golden pocket much more cleanly than the Dow. So that actually looks more bullish than the chart that we just looked at. And I know it may be hard to see. It's always hard to get these time frames and everything dialed in so perfectly. But you can see that it actually held above. So the buyers front ran the 618 both yesterday when support actually bounced and today when it just held ground. Buyers front ran the 618 on the S&P. Wow, that is very interesting to see. Actually, that would lead me to believe that support will hold better than expected on the Dow as well, and that the stock market may actually have a shot next week of doing well. So we'll see. We'll see. That was a good one. Thank you for that. Good question. Okay. So, long story short, have an awesome 3-day weekend. I'll be back at home base next week. Can't wait. Cannot wait. And I'll be here this weekend if you need me. Have a good one, guys. Take care.